All right, we're out here with Jacob. He's our mortgage guy, and we're just talking a little bit about mortgage, real estate, and everything that's going on today in the market. Rent versus buy.
With renting and buying, there's obviously different pros and cons. The biggest thing is when you own a property, you're building equity. That money you're putting towards that mortgage is your money to keep.
Why should somebody rent?
Not having to pay for repairs, or you want to get up and go. Those are probably the two biggest pros to the many cons of renting. I would say buying, your money when you're renting doesn't go towards equity in the house, right? If, getting a little philosophical, is the American way is owning property in this country.
So if you do need a place to buy and you're wondering about a mortgage, Jacob here can help you out. I'll help you find the house. You'll help them get qualified, right?
Definitely.
What are the rates at right now?
They're around 7%. It obviously depends who you talk to, but there's different factors that go into it.
The 2-1 buy down. Explain a little bit about the 2-1 buy down.
Sure. 2-1 buy down is, let's say rates are around 7% right now. For the first year, your rate would be 5%. And then the second year, your rate is 6%. And then for years 3 through 30, you will have an interest rate of 7%. So that's where the 2-1 buy down comes from. And the biggest thing about it is the seller has to pay the subsidy or the points for that lower rate. They're already giving you a seller credit, might be worth looking into a 2-1 buy down program.
So either way, you're going to benefit because let's say 3 years down the road, the rates go up, they're like 11%. You're going to have 7%. So it's going to benefit you at that point.
Definitely. Right? You can always refinance too. If you're in the first year of your loan and your rate is 5%, and it's going to go up to 6% next year, but the going rate right now is 5.5%. There's nothing stopping you from refinancing.
So in 3 years from now, if you're at a 7 after the 2-1 buy down and the rates go down to 4, you just refinance.
Yeah.
So either way, you're going to benefit.
Or if they go up to 10, you're still at a 7. So
that's good.
What do you have to lose?
Yeah.
If the seller's already paying a credit for maybe the roof or the fence or something, why not apply that towards the 2-1 buy down?
Let's go over 3 things. FHA, conventional, and VA. First off, FHA.
FHA is a great loan product for first-time home buyers. It is a federally insured loan program. It's just like any other loan program on the market. 3.5% down payment. Usually you can get into it if you have a lower credit score, maybe 600 range. But you get your foot in the door. With us, we can do 620 on an FHA loan. Conventional is the bread and butter. If you're just your standard buyer, 700 is kind of the range you want to be in.
So you maybe listen to this and be like, "Whoa, it's too much." That's why we have Jacob here. If you want to come, sit down. He'll talk to you about it and give you the best loan that you can have for your specific needs. That way you can get into a house. VA, let's talk about VA.
Okay, so VA, it's just a loan for veterans. Really good, honestly. So it's 0% down, and the rates are usually better than any conventional or FHA product you'll see on the market. If a veteran has a disability, any sort of percent, maybe even 10%, they don't have to pay that funding fee.
So if you're a veteran, definitely your option for a VA loan might be the best option.
Oh yeah.
But if you talk to Jacob, he'll let you know.